Hey, what's up YouTube? This is Leo with DRIPCalc, and a few months ago, like 6 months ago, I made a video about BITO versus YBIT, and I compared those two stocks. And basically some people on Reddit were saying that like I'm wrong, YBIT is great, blah blah blah. And in this video I want to basically demonstrate the comparison between these two stocks in that period in the last 6 months, and why I like BITO so much more, and in general I like BITO a lot. And so I talk about it a lot on my channel. So anyway, I'll do a 6 months comparison as well as lifetime performance of BITO, and just kind of talk about my overall investment thesis into BITO. But I want to make a separate video for new investors thinking about getting into this stock, and just lay out my vision for it going forward. Okay, so with that said, a couple things. First of all, this is not a financial advice. I'm not a financial advisor. If you want to invest money and you have questions, you should contact a professional. And this video is for information purposes only. Another thing, guys, please smash that like button, subscribe to the channel. If you have questions, ask them in the comment section below. When you hitting that like button, it helps the channel a lot, and especially if you subscribe to the channel while you're watching the video, that also helps a lot. Google likes that, YouTube likes that. Anyway, so let's begin, and I'll just show you. So here's the page on our website where you can compare two different stocks. In this case we're comparing ETFs, so if you want to navigate to it, you just like over here in navigation you have compare. That's for stocks where you have like earnings per share, revenue, all that good stuff. So here, for example, we have Microsoft versus Apple. You can see here is dividends, dividend payout ratios, and dividend safety. But then you have all these other metrics like free cash flow, revenue, cash and debt balances, and all of that good stuff. Now I'm going to close that, and compare ETFs basically removes all those extra charts, because ETFs do not have earnings, they do not have revenue, CPS, none of that good stuff. So it's a simplified version. Okay, so here we have a chart, and this is from the beginning of whatever is the earliest or the latest stock to come onto the market. And since YBIT was released on April 23rd, it basically tracks the performance of both stocks since that date, and it tracks hypothetical investment into each one of them. So the investment was $10,000 starting balance, and here you can see the end balance. So right now you're sitting on 25% return in like 7 months for BITO. So this beats this beats S&P 500, I believe. We can check that at the end of the video. And total return for YBIT, which is negative 2% right now. And so if you look over here, before Trump rally, they were both down, but YBIT was down by 17% and BITO was down by 7%. Since that point, here at the lowest point on September 6th, they were pretty bad, both of them, minus 27% and minus 29%. Okay, but so, and in my investment thesis video for BITO, I'll explain like how I look at things. But basically, what are these two stocks? So BITO is as here it says right here, Bitcoin strategy ETF. Actually, the strategy is investing in Bitcoin futures. So when Bitcoin goes up, so does BITO. It goes up together with Bitcoin, and they, from the proceeds on selling and buying back the futures contracts and rolling them, they pay out dividends. So the strategy, it's an income strategy ETF based on Bitcoin futures. Now YBIT is even more crazier. So YBIT is a YMAX product, and what they do is they sell covered calls on the synthetic position on BITO. So this is an income strategy based on another income strategy ETF. And that's why when it came out, I was like, this is completely insane, this is stupid, nobody should invest in this product. Because basically, you can see, if you look at the price chart, let's look at price chart for BITO. So it does go up when Bitcoin goes up, but for example over here, Bitcoin was $74,000 and BITO was $33. Now Bitcoin is 89,000, but BITO is sitting around 24. So what happens is, yes, it does capture the move of Bitcoin, but what happens, because they pay out dividend every month, that reduces the share price further down, and that's why based on just share price, it doesn't capture the move of Bitcoin. But together with dividends, it imitates the returns of Bitcoin, maybe capturing about 80%, and we can talk about it later. But YBIT is completely crazy, because like they create a synthetic position by selling call and buying put. That creates a synthetic position. It's as if they have the stock, but they don't actually have the stock. It costs about equal, so at the end they have basically like, they didn't pay anything for the stock, but they have a synthetic position on it. And so if BITO price goes up tremendously, for example, their synthetic position, let's say it's like $20, and then BITO goes up to 24, so they capture that $4 move, but then they sell weekly covered calls on them, on their synthetic position, and from the proceeds from weekly covered calls, they pay out dividends. Okay, so that's in a nutshell what the products are. But you can see that BITO far outperformed YBIT. And so what I did after I made that video a few months ago, and most people liked it, but there were some, especially on Reddit, people were like, oh, you're crazy, BITO is junk, YBIT is so much better, yield max all the way, whatever. So what I did, I went on to Investopedia stock simulator. Now this is a pretty limited product, and so I kind of stopped using it. But what I did is they start you out with $100,000 balance. It's paper trading, and I split that money into two halves, and I basically bought BITO with one half and YBIT with the other half. And so here are my transactions. I'll make it a little bit bigger so you can see. So here are the first two transactions. I made them on May 15th. Okay, so I bought $50,080 of BITO. This was the price. It was a market price, whatever. I don't think they let you do like limit order. And I bought $50,111 worth of YBIT. And this was the price when I purchased, number of shares, blah, blah, blah. Then they paid the dividend, and I calculated approximately the amount of dividend that we received. So I purchased more stock with those dividends. So by then, BITO price dropped down to $24.88, and I purchased 135 shares. And this is the cost. And so here I have the spreadsheet of all the returns, and so we can compare. So this is the number of shares I had at the time, and here's the dividend that we collected. So 3,377. Let's compare it over here. Okay, so I purchased a little bit less, actually, like $20 less. And then with the dividends I collected from BITO, I purchased this much. Let's go over here, $34.77. So still very close, like within $6. Okay, and so here are the returns over that 6 months period. After that, I didn't do any transactions because I thought you can set up like automatic dividend reinvestment, but Investopedia doesn't let you do that. So whatever, since then both of them just collected dividends. And so here's the total position right now, $112,000. It's up by 12% in 6 months, which is not bad at all. The value of the YBIT shares are down by $10,000. And remember, we reinvested the first dividend, so actually like that $50,000 has turned into $40,000. That's the value of the shares, and then value of BITO shares is about $50,000, $49,500. Okay, so now let's go over here. So again, current price $24 and $14.33. That's right now. Initial investment, initial shares, and then current value and current shares. Okay, and so over here we collected this dividend, but we reinvested it, and so I have it kind of yellow background. And here are all the dividends. You can compare over here on the page for each of the stocks. So here are the historic dividends for YBIT and for BITO. You can see all the dividends over here, and I'll put the links to this stuff in the comments, in a description for this video. But basically, like, just type in the ticker at the top of the search bar on our website, and you'll see all that information. Okay, so let's look at the results. So current value. So that current value is the current value of the shares plus dividend collected and not spent. Okay, because this was collected but also reinvested back into shares. So, and that total value, including this reinvested dividend right here, is $49,000. And these dividends right here, they were collected and kept as cash, and this is the amount. And here's the amount of dividends collected from YBIT. And also this part was reinvested, so we don't count it here. And so total value after 6 months is $50,000. Basically, it didn't go anywhere for the whole 6 months. We were up $20, but don't forget, like, on this amount, so $11,000, you have to pay tax. So let's do like tax this times, let's say you're in the 25% bracket, times 0.25. You would have to pay like $2,800 in taxes, so that would be like $47,000, 47.5. Here for BITO, the value with the collected dividends is $61,000. So that's like 22% increase from the initial investment. You do pay tax on it, so let's say you have to pay, actually you would have to pay tax on all of that, all of this money right here. So that's a little more, and therefore the value of this would be even less. So yeah, anyway, so as you can see, BITO performed much better. It actually, well, without taxes included, it's up about 20, let's do it. This divided by 50,000 minus 1, and we turn this into percent, up 23%. And over here, this is up 0.44%. Total return in 6 months. Okay, and this is before taxes. If you include taxes, you're actually down on YBIT. And so this just shows you that YBIT is a very stupid product, and I think people should not invest in it. Again, that's my opinion, not a financial advice. And I also think that YieldMax should get rid of it completely, because it's actually part of YMAX. So YMAX is an ETF that's like fund of funds. It basically includes all the YieldMax funds that are not inverse or like not short funds. And so YBIT is in it, and yeah, it collects dividends, but then like the biggest buyer of YBIT is actually YieldMax themselves. And I've shown that in a different video when I was doing like still dividend predictions for YieldMax, for YMAX and YMAG, and you can see clearly that they're like the biggest holder of YBIT, which is completely insane. So anyway, so YBIT is garbage. You shouldn't be investing in it, and even long term, yes, right now it's like a break even. You can see right here. No, it's still down like minus 1.6% overall since inception, whereas BITO is up 25%. Now, it's not great. Bitcoin did much better. Actually, let's think about it. So this came out on April 23rd. So let's see where Bitcoin was on April. All right, so here's Bitcoin chart. So on April 23rd, it was 66,423. Let's go to our handy dandy calculator. 66,423. Actually, my bad. So it's 89. Current price 89,644 divided by 66,423. So it's up 35% since that day. And go back to this compare. So Bitcoin did better than YBIT. I mean than BITO by about 10% total return. But again, like this is an income ETF, guys. And another beauty of this thing, like back then, in you can actually sell. So the reason, one of the main reasons why I hated the product, this YBIT product, is because if you own BITO, you collect the dividends, but you can sell your own covered calls on it. And so if you look here, okay, so here is my Robinhood, and let's take a look at, first of all, let's take a look at options. So the difference between Bitcoin itself and YBIT and BITO is you can sell covered call options on BITO. So for example, you can sell a covered call for say January, expiring on January 17th, so 2 months away, and you can sell like a $29 cover call, which is like $5 out, and you can collect right now about 80 cents for it. Okay, so that's $80 or 80 cents per share. That's like a whole month of dividends. And then if you get assigned, it's $5 above the current price, and so that's another 20%. So like $6, you basically collect almost $6 on top of current price if you, even if you get assigned. And if you don't get assigned, you can keep selling those covered calls, or you can go further out. And so what I'm doing, what I'm waiting for right now is for BITO to go up really high, like for example $30. And I also want the implied volatility to go up, because like right now it's pretty low, but once implied volatility gets up, you collect a lot more money for selling covered calls. And so when it gets to $30 or around there, I'm not even sure like how high the Bitcoin has to go, and I will discuss that in my investment strategy, but I'm assuming that when it goes to $30, I can sell January 2027 call like really high for about $5 for like, you know, $45 strike, or maybe even like $42 strike. Why 42? Because that's the original purchase price of my BITO, and I don't want to sell it below it. So if I have to sell it, I want to collect a little bit more money. But basically, like you can collect 10%, like 15% right now, or 13% right now, and lock in for 2 years, which is what I don't like. But you can collect $2.70 right now, and I mean, oh, look at that, look at this. Okay, so this is BIT $1, ask 550, so this is actually lower, but I honestly, because I've done that before, when implied volatility gets much higher, can actually collect like $5, $6, $7 for this, maybe even like almost $10 for this far out cover call. And so that's my strategy, because what I think there will be a crypto winter within a year, and so the price of BITO will collapse, especially that it doesn't go up a lot, because it basically gets reset down every month when they pay out dividend. And so I don't think it will ever reach this price unless they like do a reverse split, and in that case, like the reverse split rules apply to the options, to the calls that you sell. But yeah, so my plan is to sell far out covered call, collect as much premium right now. And by the way, my current cost on my whole position is about $5.20 per share, because I was selling covered calls and I was collecting dividends all this time. I started my BITO position on the day of the IPO, so I'm like the original buyer of this stock, one of them. Anyway, so the beauty is that you can sell covered calls on BITO, and by doing that you increase your total return from 25%. Like for example, in March of this year, of 2024, when the stock was like about $33, you could sell a $34 covered call for the end of the year, and that paid you $6. So your effective price, if you were assigned, would be $40, because you collect $6 up front, and that was like 20% in about eight and a half months, maybe 9 months. It was like end of March, and I didn't sell it, I rolled it, so I only collected like 37 cents for that option. But because I sold the call before, and then the stock started running away from me, so I didn't want to lose it, and therefore I rolled the option, and then I bought it back for like 15 cents. And that's another beauty of it, because like this stock is so volatile. You basically, when it runs up, you sell a covered call. When it drops, and it usually does, you can buy this covered call back for like pennies on the dollar. Like I paid 14 cents for a covered call that was 9 months out, and it was effectively sold because somebody actually paid $6 for it. But because I was doing a roll, I only collected 37 cents. So regardless, this allows you to greatly increase your returns by selling covered calls far out, or sometimes not far out. Like I'm waiting for the implied volatility to improve on this. Bitcoin is doing tremendous right now. And by the way, so here is my Roth IRA, and this is my BITO holding inside the Roth IRA, and I actually started this position at the end of August. So very recently I actually made a video about it, that I'm gonna stop buying, not only stop buying, I stopped buying any yield max funds a few months ago, but that I will reinvest all the dividends from yield max funds into this position. Now I kind of stopped reinvesting all those dividends into this position, but here's what I have right now. Here's actually the history. So I started out August 30th. I bought like 7 shares for 19 bucks. Then I waited, and I saw that the price of BITO just collapsed because Bitcoin dropped tremendously. And by the way, I think during that time, MicroStrategy was like $130, and today it's like 300 something. So that was time to buy MicroStrategy. But anyway, I kind of bought in heavy, and over here it's 100 shares, and I sold the covered call. So at the time, that covered call paid like 15%, so I got $115 for it. I bought another almost 7 shares with it, and after that I started receiving the dividends and reinvesting it, and more dividends. And actually this is another market buy, but the rest of it is dividends being reinvested. Over here you can see like so $8, then another like $2.50, and so basically $3.75 I've collected in dividends since I opened this position, plus this over here I collected covered call premium. Now most likely I will get assigned, I will lose 100 of these shares, but essentially I will be left with about 40 shares at the end of the day, and they will be practically free. I think out of pocket I only spent like $150 on it. The rest of it is like reinvesting, because when I'm assigned at 20 bucks, like you can see my cost is like 17 bucks, okay, and when I get assigned at 20, basically it's $300 profit. And so I will have about 40 shares almost free. Yeah, that's great. Maybe I get assigned before the next dividend, or before the next couple of dividends, because you can see now the value of this covered call is $4.40. So give me the gotchas. But yeah, the beauty of this of BITO is that you can sell covered calls, and if I was able to sell covered calls over here in the Investopedia, and also like automatic reinvestment of dividends, I think the BITO return would be much higher, not 23%, but more like 50% since then with covered calls. Yeah, so So yeah, it's a much better stock. And okay guys, thanks for watching. It's a lot of mumbling. I want to make another video where I actually talk about what I would do if I wanted to invest in BITO long term, and if I didn't have any shares right now, how I would approach it. So that won't be an investment advice, but I would talk about how I would do it, because I have a strategy of doing it. Like, I don't always buy it, I don't always reinvest the dividends, except for my Roth IRA here. I don't care, you know, it's $150 or whatever, $128, but and you can see this was reinvested a couple days ago, so 4 days ago when they paid out. But yeah, so stay tuned for that video. Thanks for watching, guys. Again, smash that like button. It helps the YouTube algorithm. And if you subscribe, if you are not subscribed yet, I would greatly appreciate it. It actually sends a really strong signal to YouTube that people like this type of content. So I would very much appreciate you subscribing. So check out our website, DRIPCalc.com, and you can do all these comparisons yourself over there. By the way, yeah, quick sidebar. We have this we have yield max ETF page, and we have a high yield ETF page. So high yield, you can see that BITO is actually ranked number 2, right behind BitX. So BitX had it's a double leveraged Bitcoin ETF. So when Bitcoin goes up by 10%, BitX goes up by 20%, and they pay a small dividend. But yeah, so they have a tremendous return, because in the last during Trump pump in the last week, Bitcoin is up like 20-some%, and so this thing is up 40% in the last week. BITO not so much. It basically tracks more or less Bitcoin itself plus the dividend, so the share price kind of gets reduced by that, but it's also not a slouch. It has a really nice performance, and it's number 2. At some point, it was like when Bitcoin was low, it was, and BitX was like in number 2 or number 3 position, and BITO was number 1. And these are all like high yield ETFs available out there, and they're ranked by the total return, with just the share price return, not with, and here's share price plus the dividends, and here's in this column it's dividends being reinvested. So if you reinvested dividends into BitX, you're up 183% in 1 year, or however long that ETF has been around. Anyway, and then if you look at yield max, we have, so here is a dividend announcement clock, dividend clock. So group C will be reporting dividends tomorrow in 14 hours. That will be Coinbase, Coney, and I want to make a video about that, because that sucker has pumped like crazy. And Fiat, that sucker has dropped like crazy, because Coinbase is pumping, so Fiat is losing money. It's the reverse or short of Coinbase. But you can see, let's find YBIT over here. So you can see it's all in the red since inception. If you didn't reinvest the dividends, you're down by 5%. If you reinvested dividends, you're down 1.5%, and just on the share price basis, you're down 31%. So yeah, it's not a good fund by any measure. So yeah, you can see like comparison overall. And what I want to do is I want to make a page of like top 10 mixed crowd, you know, between yield max and other alternative high yield ETFs, top 10 or top 20, something like that. So I'll make a page like that later. But yeah, so BITO is a great ETF, and soon I will make my video how I would invest in this ETF if I was starting right now. So thanks for watching, guys. Smash the like button, subscribe to the channel. If you have questions, if you have this fund, let me know how many shares you got. Just leave your comments in the comment section below, and I'll see you in the next video.